That's sort of things that you can do around that. The other, and I guess another area that we just wanted to touch on was around the global drive to ESG, sustainability and decarbonisation. It's becoming a really important factor. Now we know the United Nations Sustainability Development Goals driving to the Kyoto Protocols and the Paris Accord, keeping global warming to 1.5 degrees over this time. Hopefully we can get there. We need to start doing things to really make that happen. And just recently we've had the Climate Change Bill 2022. That's been passed, so we've now got a target of 43% as a floor of what we should be achieving in the Australian environment. This is going to have an impact, and there will start to be some financial drivers into business to start doing this. Now we had a meeting last week or the week before, I think it was, with a global company who's looking to make some investments in decarbonising their operations here in Victoria. And we were talking to them particularly around these Victorian energy efficiency certificates, which most of you would know from those annoying people who ring you at 6 or 7 o'clock at night and want to sell you a shower head, LED batteries or some water saving device. That same program is actually used for solar, because they've sort of exhausted the LED lights, the shower heads, but they still have this scheme to run to generate the certificates. And a great way of generating those certificates now is for businesses that have got an operation that's running and want to put solar on that operation to reduce their cost and displace their electricity. You get certificates for that because you're moving from the carbon footprint of the electricity comes through the grid to the no carbon footprint solar electricity on the roof. That whole system is starting to come through, and you earn certificates, and then you can remit those certificates and get paid for it. Now, this particular customer who was looking at that, there's really significant value in doing that, particularly if you can get it all done in that second year and get a big payment for it, which is something we can organise. But this company, the global director of their technology projects, was sitting across the table and said, hold on a minute. We're driving to these UN Sustainability Development Goals, and we're now captured under the global carbon contract or carbon accounting rules. If I get paid for reducing my footprint because I'm selling my certificates to somebody else who's using that to offset their carbon footprint, I don't think I can actually get value for that. So I'll look at my project and I'll say, well, I'll either take the money that I'm going to get from that and get that value, or I'll say, I'm actually not interested in that, but what I'm interested in is what's the carbon footprint reduction, how many tonnes of CO2 is that going to be, and what does that do in terms of my business's drive to reduce my carbon footprint by a 25% target by 2025. Because there's another benefit for them on a global scale where their cost of capital through the capital markets is reduced because of their carbon achievements. So there's different ways of getting value for this. So I think having the climate change bill now is going to drive Australia much closer to those sorts of environments and those sorts of carbon reduction. So there's a real change coming, and the need to start decarbonising your businesses and the merits of the value of that. Okay, we've got all these Australian-based certificate schemes that we can get some value out of it, but there will be other mechanisms whereby it might even be more cost-effective to not remit those and then take the cost of capital as a better outcome. The challenge for that is the businesses who are the carbon emitters and generating using fossil fuel, they're going to have to find a different source now for getting their offsets, which will drive us further and faster towards that outcome, or it will push their costs up because they'll have no way of compensating themselves for the carbon footprint that they have to pay. They have to surrender certificates or pay a dollar value. And whichever way they go, they'll have to pay, and that price is going to go up and make it harder for them. So just some interesting background there. There's solutions that we can put in place that'll get you towards solving those problems that are hitting you on your electricity bill. But we're now also going to need to start to think about what are some future possibilities of where this is going to impact the businesses commercially, and how do those solutions address and contribute to those other carbon abatement opportunities that are coming. Time for another poll.
Okay,
Brad.
so we've got our last poll up here. So if you can all go back into your devices, please. If you're having any issues with your devices, please do send a notification for those that are online. a notification through the Q&A section, or for those that are here in person, just speak to Faith in the background. She'll be able to support you. Interesting, very, very interesting, Steve. Whilst we're waiting for the poll to be conducted, we're seeing the vernacular around ESG score to be quite a significant conversation, and it's transitioning away from previous conversations, and it's really at the forefront of businesses right now. So with an improved score, we see an improved interest rate.
Yeah.
And so could you maybe just tell us a little bit about what businesses should be considering when they're looking at the priority for decarbonisation? Is the focus heavily on the ESG and the E being in the ESG?
Well, I think it is. I mean, there's the triple bottom line now. This is an area that businesses have to invest in, because socially there's the expectation, commercially there's a driver to make it happen, and environmentally there's a crisis that we need to address and leave a better world for our kids and our grandkids and their kids. Generationally, we've got to make a contribution, because I think we've been a little selfish in the way we've stewarded the assets that we've got. High horse, I'll get off. But as a business, you're really now getting options. So you see there's the LGCs, there's STCs, there's VEECs, there's the Australian scheme, all these different certificate schemes, and that's probably one of the things that in the Australian context, it's a bit of a basket case, because we're a federation. Everyone wants to do it differently, but everyone wants to try and say that they've got the best scheme, and it's either a race to the top or a race to the bottom. But now we're going to have this alternative mechanism that's going to come in and say, well, from a global perspective, when our global finance markets are saying, well, drive to the achievement of these Kyoto protocols and the Paris Accord, and we will give you an improvement in the finance that's going to come to you. Now, that's a global financial market that we're becoming part of, and it's a trade-off. So where's the value for your business going to be, and is it a short to medium term? Well, I'll earn the VEECs and I'll sell the VEECs and off will go, because I can commercially over my value horizon, that gives me the best bang for my buck. Or do I say, well, that value's there, but actually the long term I'm going to drive myself to a lower cost of capital, and that cost of capital won't be just on this project, it'll be on all my projects, and that's a bigger pool that's actually going to be more valuable to me over the long term. So if you can drive significant reductions in your business's carbon footprint by reducing the carbon content of the electricity that you're consuming, you could have an effect not just on the electricity investments that you're making, but on all of the way that you finance your business. And that lower cost of capital for debt and for working capital is a really big driver and sort of incentive to do the right thing.
Yep, great answer. Okay, so let's have a look at the results. Okay, we're seeing a high percentage that are rating this in about the third tier of.
Yep.
Is that a surprise to you? Is it about right to you?
Well, I look at that. The unsure is 12% of respondents.
Yeah, it's interesting, isn't it?
So that means 88% of businesses have taken this as one of their top three. I think that's really encouraging. Whether it's first, second or third, most people it's sort of 25% each for 1 and 2, and then 30-odd% for third. That's a really interesting thing, but what's really encouraging is there's a lot of people putting that right up there as a key business driver, strategic driver to do something better about sustainability in the organisation. Really encouraging.
Very good.
Yeah.
Very good. Now, we've heard about the marketplace. We've heard about the importance of understanding your electricity bill. We've understood power quality and supply to site. We've also learnt how we can start to tackle some of these issues. Tell us a little bit about Acacia Energy, Steve.
Sure thing. Brief plug. So what do we do as Acacia Energy, and how can we help you achieve all of this? Really, we want to be your end-to-end partner. And the way that we've set ourselves up is we will sit with you and understand what the problem is. And Riley put it really well. It's actually, we want to understand what your challenge is and then work with you to work out what's the best way to solve that challenge in your business. And then we implement that, and then we will operate it. So we go from conceptual through to design, implementation, commissioning, operation and maintenance of it, and then also bringing the results back in through the energy and carbon markets and operating the assets for you over the long term. So we span that full breadth. Small business, but we've got the capability to go across all of those areas. So that to start the process, and there's a fair bit of detail here, but this is an example of what we do with the businesses that we're talking to understand what their problem is. So the first thing we do is we get a year's worth of interval meter data for you and a year's worth of bills, and understand what that actually looks like in terms of how much money you're paying for your electricity, how much you're consuming, and importantly, what is your levelised cost of electricity. So over all of your electricity usage, whether it be the retail bit that you negotiate, whether it be the regulated bit that is fixed through the network charges, all the environmental, all the other charges, what does that come down to in a cents per kilowatt hour charge levelised across all of your activities? So we'll look at consumption and then what you're spending and what your levelised cost is. That's the baseline. And then we look at all of the different options. So whether it's just putting solar on the roof, whether it's putting solar in conjunction with a battery, solar in conjunction with a generator and battery together, or any combination of those, we will look at a whole variety of those different variations and present to you, here's the scenarios of 3, 4, 5 different combinations. And the way we do this, and from that we see what's the saving, so what's the renewable energy saving going to be from that? What does that mean your revised electricity cost is going to be? And then what's your changed levelised cost of electricity, and what percentage of reduction are we achieving? And what's the investment to achieve it? And what does that do in terms of the carbon footprint reduction? What's the payback? What's the IRR? And how many hours would assets be running on your site? So we do that for the site based on 1 year's worth of data. And we use the same intelligence that we would in terms of the system that runs the operation of these assets and does the simulation. This is a simulation of what would happen in the real world had we used or deployed this optimisation embed engine that Riley and the engineering team have developed. If we had that running on your site in that last 12 months, and that was going to be representative of your consumption over the next 10, 20 years. And these assets have got significant lives. And you'll see, we also can see from that how much of the solar, or how much of a saving is coming from solar, how much is coming from operating the generator to sell into that wholesale market, how much are we achieving through the demand charge savings, and how much of this is coming from the frequency control ancillary service. So this site is a site where we've put, there's a solar system in place and we've put some generation in place, and these are the sorts of results that we can achieve based on that sort of investment. And that's the start of the process. Once we agree that, we will then go into the implementation, working with the distributor to get approval to put this connection in place or put this system in place and connect it to the network. We commission it, we operate it, and keep maintaining it, and then do that engagement with the carbon markets and the energy market. And every month there's a statement with a payment back to you of the remitting the benefits of this, where we're selling electricity in the market on your behalf as part of a whole thing, and or providing the FCAS services into the market on your behalf as part of an aggregated solution. So some examples, these are all on our website. If you go to acaciaenergy.com.au, you'll find these here. These are the projects we've done. So Cootamundra Oilseeds, that site, we reduced their seasonal demand. That was the problem that they particularly had, so we used generation to reduce their seasonal demand. Core problem, but we're also using those generators to make the money on the wholesale market, bidding into the FCAS market, delivering higher value through those additional revenue streams. Numi, which is Freedom Foods, that's the one Riley talked about before. They've changed their name since we did the project. This was about securing their operations and reducing their costs. So massive exposure to power quality issues, and at that site a 3.8 megawatt solar system on the roof with the battery solution and the complex approach to solve the problem has really protected them from those power fluctuations and protected their operations at the site. Andrew P. Swine, all of this harnessing the sun to make water. So a megawatt of solar, they cleared a field. This is a winery up in Swan Hill, and they pump the water out of the Murray to irrigate their farmlands, and that was a really expensive source of water for them. They had an artesian basin that they could well into. They're drawing that up, and this is actually a desalination plant that's in the shed there. So that is powered by a megawatt of solar. There's some biodiesel gensets there to help make sure that there is supply when they need to pump the water and get it up there for their operations. Oztech cost reduction through solar and biodiesel. So we a 450 megawatt solar farm and a 550 kVA biodiesel genset, and we're reducing costs for them. All of those same areas: solar reduction, peak shave, generation revenue, and the FCAS services for them. And there's OSCO, that's down here in Laverton, cost reduction and energy security, again the issue for them. Cold storage facility, you can't be without power because the goods that their tenants would be operating would go off. So making sure they've always got power. And then there's the Yarra Energy Foundation's community battery. So that's the first of hopefully 200 of these that are going to be deployed in the low voltage networks around City Power, Powercore and United Energy. Really fascinating project and an exciting one for us to be involved with. So they're the things that we do and able to help you with, and love to talk more at some point as to what we could do with you here and everyone who's virtual as well. Brad, I think we're done. We've talked a lot. Thank you for your attention. Hope it's kept you sustained as well and been a good breakfast. But over to you, Brad.
Thank you. Actually, whilst you're up here, Steve, if I could get you up here as well, Riley, maybe the two of you guys can go take a seat over here.
In the following one.
There's been a lot of content that we've gone through today and probably a number of questions that have come out of the content that's been delivered today. So whilst I gather any thoughts and anyone that wants to raise a question, you're welcome to do so. But Faith, could you do me a favour and just jump on the online Q&A and see if we've got any questions, and maybe let's just start there whilst we're gathering thoughts for those that are in the room.
Absolutely. Alright, so we've got quite a few that have come through online. And for those in the room that prefer to ask an anonymous question, you can go ahead and put your question in this Q&A section and I will read it out. So the first question we've got for Riley and Steve: when's the last time a price cap was put in place if the price was set in 2008?
Well, so in terms of put in place, so it was established in 2008. Prior to that, there hadn't been a price cap arrangement in the energy market. So it had sort of it was the sunny day scenario. No one had really planned for the rainy day when that needed to happen. Since it was put in place, it hasn't been used that much. Obviously, during June this year, when there was the issues with the energy market, there was the price cap happened regularly through the month of June. Prior to that, it had been a couple of years before had it actually been used in a wholesale sense. And that, I think, was the event where South Australia was blacked out because there was the storm that knocked out the transmission from Victoria into South Australia. And cost of electricity, and it can be done in one jurisdiction. It doesn't have to be done across everywhere. So it was in South Australia specifically that they put the price cap, but everywhere else operated as per normal.
Our next question is: does the demand reset happen automatically on a running 12-month basis, or does the customer have to request a reset in order to have a lower demand charge applied to your bills?
Great question.
Yeah, really good question. And the answer is it should automatically reset, but this is an area for the procurement people and your accounts payable people to monitor really carefully. Is look at the bill, and it should on the bill there should be the information as to when the event happened that is the maximum demand that you're being charged, and check the date of that and make sure that if that event was more than 12 months ago, that your tariff has actually been reset or starting to drop down. It should happen in the billing systems automatically, but it doesn't always come through. And I know there's a number of consultants or a number of businesses use brokers to go and do their energy procurement. This is an area where brokers often find that you may have been overpaying for 6 months, 12 months. So I've even heard of up to 3 years where the demand should have been reset, but actually in the billing system it hasn't been. So accounts payable departments, be vigilant around this.
And we've got another question about the the cap. What is the difference today in the cap being applied and when Hazelwood shut down? Did we see a cap then, even though prices went up over 100% when we came off contract?
There wasn't a cap applied when Hazelwood shut down, largely because that was a known event. So the market knew that Hazelwood was going to be shutting down. And it was an orderly transition. So even though prices went up, the wholesale market operated in such a way that it was planned, it was foreseeable, and it didn't hit that point where over a rolling 28-day period the price moved up to $640 a megawatt hour on average. Prices moved up, but it's the administered price is triggered by looking back over the previous 28 days and seeing, and $640 a megawatt hour on average is a very significant price increase. So even though a major supply source was taken out of the market, it didn't have that substantial effect.
Are there any questions before you ask your next one? Are there any questions from the audience? Faith, if you just want to take over the microphone.
Cheers, guys. I'm interested in your views on viability of the various incentive schemes for LGCs, and because my personal view is that they've done their job. Solar stacks up. There's probably no need for any more incentivising, to be honest with you. There, probably the other areas we should be incentivising, like EV charging and so on. So I'll just be interested to get your views on that and whether there might be change at government level.
No worries, thank you. Happy to take that one, and I don't think they're going to go away in the near term, and they are, particularly now that there's a target of 43% here in Australia. There's businesses can invest and use that as some mechanism to say, well, I know where I'm going to get my money from. Now, they've got a sunset on most of those already. There's VEEKs coming, or the VEEK systems are there as well. But I think, as I was mentioning, the fact that we're now with a 43% target, we're aligning into that more global market, and the global market is going to say, well, rather than an incentive scheme that's been created here locally, we're now part of a more global picture, and that global incentive is the lower cost of capital through reduced interest rates based on achieving a carbon footprint. There will be a different mechanism to value the benefit of the investments. So LGCs will move us towards there as the other ones start to come into play and deliver value on your whole business, not just the energy investments, and opening up the access to a lower interest rate. That will become a greater value, which will mean that locally we won't have to have governments provide that as an incentive, and they will then be able to redirect those funds to other things. And EV charging, promotion of EVs, promotion of community batteries and those sorts of things, that will be where the money will move to inside Australia.
Very good. Very good. Any other questions from within the room?
Hey Riley, this one's up for you. Thanks for the harmonics and distortions and sags and the new dinner conversation. I'm interested in all the infrastructure that might be going in to deal with that. Is it having a relationship to the base load, that green line, as this alternate energy created by all the examples you've put up? Are we seeing that that's actually helping the original problem? Is it stabilising the network?
So that original green line, which is your 50 Hz sine wave, any generator connected to the network will be supplying power irrespective of the generation type. The harmonic distortion, that particular one, is more about the loads you have within your factory or your facility. As towards stabilisation, that's more of an FCAS sort of response. Steve mentioned the FCAS contingency market, which is a market where you sit ready to respond in case there are any stability issues. There is also a regulation market where registered generators vary their output in real time to match load across the entire of the NEM on the eastern seaboard. I believe, and don't quote me on this, but I believe that the regulation of the FCAS markets, the value is going up, especially in the regulation markets, which is a factor of more and more renewable generation, intermittent generation coming onto the network. Which is non-dispatchable. You can't choose when the sun shines, you can't choose how much wind blows. So our regulation, FCAS markets, and that stability that I think you're referring to, the value is going up because we are requiring more of it. At the moment, that's going towards our larger coal and especially gas-fired plants, which can respond a lot faster. But as we move towards energy storage batteries, which can respond far faster than even your gas operators, they will remove that volatility from the network, or increase the stability of the network. Does that answer the question? Yeah. Fantastic.
Very good. Any further questions? Otherwise, Faith, are there any further questions?
We do have two more that have come through. The first being, how does what you do work in such a volatile market?
Right. Well, volatility is probably our friend in some respects, particularly, the demand side of things in terms of the peak shave, that's really on the customer side, and that's managing things on the customer side. On the other side, I guess the participation in the wholesale market, it becomes valuable if we were to be your retailer and do the pool price pass-through, then you've got those assets that are sitting behind the meter that are your physical cap from the network, or from the wholesale price. So you would be using those assets more in a more volatile market, and the value of protecting yourself and capping your cost would increase because the price moves up above 300 or whatever benchmark we set, and that's when you run your generation behind the meter and you're saving yourself money. Alternatively, if you've got a retailer with a fixed tariff and we're responsible for that meter that we put in there where we're operating the generator and selling the electricity at the value, if the market is volatile, we would run the generator, and more volatility means it runs more often and there's more revenue coming from the operation of that asset. So it's our friend, but what it does is it either protects the cost that you would otherwise pay, or it increases the additional revenue stream that we can generate with the controls that we put in place.
Very good. Any other questions from the room? Any questions, Faith? Are there any further questions?
Final question, Brad.
Okay.
What kind of businesses can generate revenue from batteries and generators?
I guess largely anyone. The seasonal loads are a great one because that's where we use the generation to trim that peak demand, and there's an immediate benefit there. And then because we've got it there, we can operate it to generate revenue. But whatever you're deploying these assets to solve a core problem around reducing the cost of electricity, protecting yourself from instability of insecure supply, there's a business case in that. Whilst it's there, or once it's there, we then operate it to do these other services and generate additional revenue for you. So anyone who's looking at these investments can benefit from the use of operating the assets behind the meter in a way that will create additional revenue streams.
Okay, well, I think it's pretty close to a wrap time. So I just wanted to thank all the participants here. So let me just move this forward. And I'll keep going forward. Actually, I'll now go backwards. My apologies. You know what, I'm going to go with it. So I just wanted to thank everyone for your attendance this morning. It's been absolutely fantastic to see everyone here. And for those that have been on the live stream, we really appreciate the time that you put in towards today's session. We do understand that there'll be a number of questions that you may have that you don't feel comfortable to ask right now. So we'll stay around for a little bit longer and certainly answer any of those questions that you may have. Further to this, if there are any further questions that come through the Q&A on the poll, we'll respond in accordance to those questions. And also, I'd just like to thank a few people. So firstly, to you guys for your attendance, to the venue It's a fantastic venue, and I really do appreciate what Cube 3121 have put on here at Mic Drop. And also to the Goody Catering, that was pedal powered to our door. So we are always looking at ways for sustainability, so we thank them for their food. So post this event, we'll reach out to your business and see if you would like for us to expand a little bit further on your electricity bills, to give you a more detailed understanding around the marketplace and to make it more relevant towards your business. I think we've had a number of topics. Some of those topics you probably want to recapture in terms of what does it mean to our business and what does it mean to our operation, and if we could review those electricity bills with you, we'll be able to walk you through that process as well. Guys, I'd just like to say thank you very much for joining and for your attendance. This is our maiden event. Before we wrap up, there will be a Survey Monkey. It'll be a really quick Survey Monkey. It's a yes or no. I realise I've taken it off the screen. So I do apologise. What this really, the intent of the survey is really simple. It's really just to rate the venue, rate the catering, rate the speakers, rate what we're doing so that we can improve our performance for the next time that we go through this process. So you can see at the very bottom there the link on here, www.surveymonkey.com.au with the // on there. It'll take you 30 seconds, and if you can complete that, that'll be absolutely fantastic. Thank you very much for your attendance.
Thank you.